What's going on, YouTube? It's Dave's Daily Trades, and we are back with another update on AMC. So, of course, guys, let's start off the day by congratulating all those diamond hand apes who withstood that drop yesterday and also in pre-market today. I mean, talk about a reversal. I absolutely love to see it. But in today's video, we're going to be talking about where I currently see AMC headed for the rest of the week. And of course, we'll be forward thinking here too and look at the weeks to come. We're also going to be breaking down the terminal shakeout, what this is, why it happens, and why it is so freaking bullish. We're going to be taking a look at the overall rocky market, how this relates to AMC, and what's going on in the overall economy. And lastly, guys, we're going to be breaking down the options flow using our favorite tool, Unusual Whales. But without further ado, let's roll right into the intro and then hop into the technical analysis. And we're back. All right, folks. So, like I said, beautiful day to be an AMC ape. Volume was absolutely crazy today. In retrospect, not so crazy, but for the past month, we have not seen volume like we have in the past couple of days. Today, we hit over 100 million in volume, which absolutely means we are trending in the right direction. Now, I want to point you guys down here, and we are on the 1 minute chart, and look at volume for this first candlestick here. That's absolutely crazy. And to put this into perspective, we have not seen a green candle like this on the 1 minute, 1 day, 1 hour, whatever you want to call it here, in quite some time. So it feels really good to be back here. But let's break it down, guys. So what I have pulled up right now is the 1 minute chart. I know I never really look at that 1 minute chart, but today I do want to discuss this because something interesting is playing out. What we have is a mini Wyckoff accumulation schematic in this larger scale time frame. This is going to help us predict more of those daily moves, and the larger schematic is going to be able to help us with the larger scale picture, the big time action. Now, what we have here is we do have the selling climax, which happened yesterday, automatic reaction, sell test in phase B around this area. ST in phase B here defines that lower range in that trading range, and the automatic reaction has the higher end range. What's quite interesting is that spring in pre-market today actually acted on the macro scale time frame, but also the micro scale time frame, which is very interesting to see. We had that spring, and what happened this morning? Pre-market was on fire, guys. Opening bell was fire. I absolutely love to see it. We went from $20.80 on the low here all the way to a high of $24.30 within just about the 30 minutes of trading. That's great to see. $4, I'll take that any day. After this, it was a little bit shaky throughout the day, but what we had play out was our LPS over here. We had a second LPS right before our SOS. And look how we closed the day. Based on this upper trading range here, and I'll pull over the Wyckoff schematic so you guys can compare this in real time, we literally ended on the top of the trading range based on that automatic reaction back here on the 13th, which of course was Monday. So that was really fascinating to see. But what comes next? Well, our favorite thing comes next, phase E. We'll bring it in here for you folks so you can all see it. This right here. Accumulation schematic number 1, and I'll link this in the description so you guys can see this in real time. But pretty interesting how this plays out, and it's really cool to see these smaller time frames play out on the Wyckoff schematic, but also the larger picture as well. Now, let's jump into the big picture, where I see us heading, and what I think really happens next with AMC. But to do so, we're going to jump into this 1 day chart. Now, excuse all of this over here. That's just because of the 1 minute. But what we had today and what we've been having is what's called a terminal shakeout. And shout out to Colin over on Twitter for pointing this out and providing some really great information. So the terminal shakeout is a different type of spring that occurs in the Wyckoff schematic. And of course, after reading through a lot of this stuff, what you have is different springs within the different schematics based on that first schematic that we have been discussing. So I know it gets a little confusing, but bear with me on this. So what is this terminal shakeout? And of course, guys, that's exactly what we got today and in part yesterday as well. So the offer appears strongly, great seller interest, which is what we saw. We saw lots of selling volume on the charts yesterday. I mean, breaking this down here, we saw one of our biggest volume days in a while. Of course, not today, not including today, rather. So that was a bit concerning. But moving over to the schematic, this is evidenced by a sudden increase in volume and an expansion of price ranges that produce a large penetration of the support line. So what this is, you have that massive sell pressure that literally feels like it's never ending. That's what we got from just about the $35 range all the way down to $20. Sure, it was ugly, guys. It was, for some of you folks out there, maybe a little scary. But what happens after this is really interesting. So you have that terminal shakeout, which is just another spring that can occur in the Wyckoff schematic, and then you bounce up into the trading range again. But this goes a little bit further, and it's so important, so we're going to read right through this. In essence, spring and terminal shakeouts are all about the same action. A bearish move that breaks through a previous support area, like we got, but there are differences between them, and these can be found in the intensity, the volume, and scope of their development. While spring is used to define shorter movements with a light or moderate volume, terminal shakeout is used to define movements with a much deeper penetration and with a high volume. Bringing it back to the charts, I mean, look at this, guys. Look at this. We absolutely broke through our ranges. We broke through that lower trading range, and a spring would have been this right here. What happened over in this range here. That would have been a spring. But the terminal shakeout goes well below that trading range, which is established from this up here, the automatic reaction, which is the high, and the low you have selling climax and sell test in phase B. Those are your ranges. We dropped well below our range. We had volume increasing on the bearish side. So that is exactly why we are in this terminal shakeout. But why is it important? Why are we talking about it? Well, anyways, the offer is in control of the situation. There is extreme weakness in the price falls, what we saw. For this type of spring to be successful, there must be a strong inflow of demand that drives the price back up with wide price ranges and a relative high volume. Well, jumping back to the chart today, would you say this would be high volume to the upside, just as this thesis kind of explained here? I would say abso-freaking-lutely. But the biggest thing is looking at kind of the description of this and what it says, we should absolutely start making moves and continue this bullish run until we get back into the trading range. So what would that look like, guys? That would look like a push back up here into the just about $33 range, which of course would be some type of resistance at this line developed over here and just recently on 12.8. So pushing back up here, taking one last retest of that $28, $29 range before starting our move higher and higher. So we'll jump back to this and just finish it off. A first indication that demand may be entering is if after penetration, which is that bearish move down, the volume remains high, but price range begins to decrease. If demand does not appear, the price will continue to fall, and you will have to build a new accumulation area before a substantial upward movement can take place. So really, all eyes are on tomorrow. What we need to see happen tomorrow is continue this move up. But going back into this 1 minute chart here, this is why we kind of broke it down on the 1 minute scale. If this does play off, this micro schematic, of course, accumulation schematic plays out and we are in this phase E, well, phase E is that upward momentum where we do start to have price rise up. And it's not a straight line, but it is something that bounces around but continues that upward momentum. So that's exactly what I'm looking for tomorrow. And of course, guys, if this plays out the way I'm expecting it, well, that terminal shakeout is absolutely in effect, and we should absolutely be moving right back into our range. Now, like the schematic shows, it's not going to be an upward shot, but it is going to be extremely bullish. What we have is we have the retest into the trading range, a slight breakdown, and then we have our test, our 2 test phase before moving up to our LPS, which is just about in the middle of your trading range typically, before breaking out, getting our SOS, and then moving to all-time highs. That's exactly what I think is going to be happening over the next couple of days and, of course, couple of weeks. But, of course, guys, we're going to continue to monitor this, update you folks daily, and literally just go from there. Now, let's jump into the options flow, because this also plays into the thesis of this run is not over and is absolutely continuing. What we saw come in today was actually great. We saw a lot of puts being sold. Specifically, we had a group or a bunch here for 12-17-21. If you guys don't know, 12-17 is this Friday. So this Friday's expiration, these puts were being sold. Now, that tells me that A, we're expecting some bullish freaking price action. And we're not talking about small premiums here. We're talking about 104,000, 338,000, 241,000, 123,000, 100,000. That's some pretty good stuff. If we move up, the 1-7-22 puts being sold for the $24 range. 302K, 122K, 103K. Guys, this is great to see. And even towards the end of the day, we're seeing some calls being printed. Meaning, this was our low. I do believe this was our low. Could we see lower, guys? Of course, anything is possible, specifically with the stock AMC. We never know. But I'm personally going with the story that that low is in, and we're going to start the climb up back into our trading range, right around the $30 range. Now, I would absolutely love to see $30 or $32, $33 by the end of the week. That would be absolutely insane. Let's see if it's possible. And according to the options flow, we're getting some bullish signs. Those puts are being sold. Calls are starting to come in. Volume is here. So if we can keep up volume and continue that upward momentum, we are freaking golden. But tomorrow, we'll see what happens. We'll break it down, of course. Going into the flow levels specifically for today, we did see the call volume heavily outweighing the put volume. It was 71.3% calls, and on the put side, 28.7%. On the number of calls, on the other hand, not really much change from yesterday, and actually, I don't think any change really. We had 55% calls and 45% puts. Of course, guys, we have been talking about the expirations. That 12-17 did have some volume over here, but specifically that 121.22 expiration, we've been discussing for quite some time. That is definitely on the very bullish side. But then by 218, you got bears back in control. Breaking it down by strike, you did see that the bears were doing everything in their power to keep it under the $25 range. But on the other hand, exactly plays into our other thesis of potentially hitting that $30 or getting back into the 30s by end of the week. The bulls are targeting that $30 range. So we'll see what happens. We'll keep updating you guys throughout the course of the week, and we'll go from there. But, guys, something interesting happened today. We're actually going to jump back to the chart real quick. AMC had a freaking great day. $20 at the low, all the way to a high of $25.12. But if we take a look at the S&P 500, something a little different. Now, AMC had the low in the morning after that drop-off, but look at this. The S&P closed right around where they opened today, slightly up, very slightly. So a lot of people have been saying, where is that negative beta? Today, we got a slight test of that negative beta, where the overall markets are trending downward. They're not really making much moves, and for the most part, traded sideways throughout the majority of the day after that decline. Where were the buyers? I don't think the buyers are coming. Well, why is that? Well, we do have Wednesday. The Fed is coming on, and they're going to be talking about what's going on with inflation, tapering, and all these other various factors that are going on. And right here, this is a quick post by Bank of America, and they're warning November annualized inflation could surge. I'm going to be honest with you guys. Remove could and just put will surge, because inflation is going absolutely crazy right now. Fed really kind of missed the ball on this. They were way too late to act, and now it is really going into panic mode with inflation. I mean, 6.8% was for the last month. I mean, for this entire year so far. But let's be honest. If we used old metrics, inflation is actually more like 15% if we are going to compare it to the 1970s or 80s like every single analyst is out there doing. So things are shaky in the market. We got Evergrande, who already defaulted. They're going through that filing process. Hopefully more to come on this because they've done a piss poor job on really updating the public and even their investors. We have other Chinese real estate development firms who are already going bankrupt, but also on the verge of bankruptcy as well. It absolutely is gonna tie in and really fall over into the U.S. equity markets, but also from a global perspective. It's not just gonna be U.S. and China who get hurt. It's gonna be Europe. It's gonna be Australia. It's gonna be everyone in between, guys, because this is a global issue. And as we talked about yesterday, who is a big investor in Evergrande? BlackRock. BlackRock absolutely has some giant ties to the U.S. economy. Of course they do. And it's not going to be good. Margin accounts in general are extremely stressed. And I think firms are doing everything they can right now to get cash on hand because there is a lot of uncertainty moving on in the markets. To see AMC reverse today while the overall markets trade kind of sideways after their pre-market decline, I'll take it. I love it. It shows that AMC is not your average stock. It's not even the overall markets. It's different, and it's going to be much different come weeks and days. So guys, that's all I have for today's video. Be sure to smash that like button, subscribe for more content. Peace out, and tune in for the next one.